That's another comparison. ETF. Everyone goes on about ETFs, right? So where is ETF? ETF, where is it gone, man? Why does it do this? Right, here we go. So ETF is here. Let's go and look at ETFs. Right, there we go. So if I was to put my money in an ETF and leave it there, for example, let's look at this one, right? Over a year period, I would be down. I'd be down 21%. So why would I do that? Let's see, Vanguard. I'd be down as well, just at the 1%. Let's see, S&P. I'd be down 9%. This one is a promising one. I'd be up 5.89%. So if I'm gaining 5.89% ROI on a ETF over 1 year period, why wouldn't I just gain that 5%? Like most of my stocks are now 5% anyway, the ones I picked anyhow. Like for example, ExxonMobil is 5%, well, just over 7%. Intel is 6+. What else? Netflix close to 5. I purchased it literally last week. PayPal is 4%. So as you can see, fair bit of my stocks are 5% as we speak anyway. So if I were to get my money out on that, I'd be equaling the ETFs. Therefore, I think my strategy is working and it makes sense for me to continue doing it, because essentially, instead of waiting 1 year to gain so let's just say 5% return or 6% return, I'm able to gain that profit within 2 to 3 weeks to a month, basically, right? So far, so good. So it makes sense for me to continue this way. It's not day trading as such, but it's a different type of strategy, but strategy just seems to be working, as you can tell. So key thing with trading is that whatever strategy you have, I guess you got to stick to it.